Everyone, welcome back. Hope everyone had a good trading day today. This video is a quick recap of how Nifty behaved today on 29th of April. So let's walk through today's chart and understand the price action one bar at a time. Okay, so looking at the daily charts, we have been in a strong bull rally since 7th of April here. The bulls showed hesitation here. The bears got a bear surprise. However, there was a big tail at the bottom of the bar here. Also, a possible breakout test of this swing high of 25th of March. On Monday, we have another bull inside bar here. It is a IY pattern. This bar, 24th of April, is inside 25th of April bar. Also, Monday's bar, 28th of April, is inside 25th of April. So, an IY pattern and a buy signal. However, look at the bars to the left. We have three dojis here. We have a bear bar with a tail at the bottom of the bar. And now we have an IY pattern buy signal right near the top of this small trading range. What do you think is more likely? It is more likely that we might have sellers above and buyers on every pullback. The buyers will look to buy on a pullback rather than buy high in this weak bull trend, in this trading range, in this bull channel. So going into the day, I was expecting sellers above the previous day high and I was expecting buyers on a pullback. Also, after Monday, we had about 2 days for the monthly bar to close. If you look at the monthly chart, the bar is going to close, was about to close in 2 days. And the bulls, with that bull inside bar on Monday, with this bar on Monday, have confirmed that they want the bar to close, the monthly bar to close somewhere near its high. So was I expecting a strong bear trend day today? No. The bulls on the monthly chart want the bar to close somewhere near its high. However, the daily chart suggests me that the bulls will look to buy on a pullback rather than buy all the way up here. So I was expecting sellers above, but buyers on a pullback and buyers, the bulls to close the monthly chart somewhere near its high. So a sideways day was more likely than a strong bear trend day or a strong bull trend day. Okay, coming to the 5 minute chart. Yesterday on Monday, we closed in a bull channel with higher lows and higher highs. Have the previous day high here and the previous day low here. I was expecting sellers above the previous day high, like how I discussed on the daily chart. However, I was not expecting a strong bear trend day. So where was I expecting buyers? I was expecting buyers somewhere around this prior swing low, bar 69 low. Or it was possible that the bull channel will continue and we might find buyers somewhere around this bull trend line. Okay, Bhavan, big bull bar closing near its high, breaking out above this previous day high. However, it is possible that we are approaching this measure move target before we find sellers. We are so close to it that I would wait for a strong follow through and a couple of closes above 24,450 above this measure move target here before I look to buy. So good bar for the bulls, first bar of the day. However, we need to break out above this measure move target. We need to continue going higher above this measure move target, or else this may turn into a bull trap. Second bar of the day, okay follow through for the bulls. We have two consecutive bull bars closing near its high. It is a reasonable by the close bull trend. However, we are right near this measure move target. It is possible that this is a spike and a channel bull trend. However, since we are right near the measure move target, it is also possible that this might turn into a bull trap and reverse back down. Higher probabilities to wait for a strong follow through above this measure move target. Bar 3, disappointing for the bulls. The bulls who bought the bar to close will be disappointed by the look of bar 3. They will look to scale in lower, which makes me think that there are more likely buyers below the low of bar 3 looking to exit at the close of bar 2, which is what happened on bar 4. We found buyers below the low of bar 3. We reversed back up. However, the tail on the top of bar 4 suggests me that there were sellers. Or let me put it better, there were buyers who were disappointed by the look of bar 3 and were looking to exit their longs. What about a high when buy signal on bar 4 and buying above it? We're still right at the measure move target. So I would wait for a strong entry bar, strong follow through on bar 5, a strong bull bar, and a breakout above this measure move target high before I look to buy. So more likely sellers above. Also, uh, sellers will wait for a second entry short here. Any second sell signal somewhere near the high of this range, the sellers will take that short. It is a good area to go short. Bar 5, instead of giving a good sell signal somewhere up here, the bears had a big bear breakout straight away. Aggressive traders could straight away sell below the low of bar 4. We went up, we went down, we went up again. It is a lower high double top on a smaller time frame. Aggressive traders could straight away go short below bar 4. High probability is to wait for a bear bar looking like that and go short below that. Looks like we might go lower, but difficult area to go short as well. We are right near the previous day high, we are right near the EMA. So not the best place to go short, but still, after such a big bear bar, at least a small second leg down is likely. Bar 6, now we have consecutive bear bars closing near its low. It is a big bear surprise. Almost if you see the high of this is 24,440, the low of this is almost 300. So we fell for almost 140 points here. Big enough bear surprise that we might go for at least a small second leg down. However, like I said, we are right near this bull trend line, so we might find buyers somewhere in that area. It is possible that this might turn into a opening bear trap, opening sell climax, and we reverse back up. But looking at the strength of these two big bear bars, at least a small second leg down is likely. Bar 7, a low one shot. However, look at the tail at the top of this bar. We close the gap with the bar 1 low, which is an indication that the bear trend is not as strong as it looks. This is more likely a bear leg in a trading range. The high of this bar is above the low of bar 1. The cap closed. The bulls who bought the low of bar 1 were able to make money. If the bulls are able to make money, the bear trend is not as strong as it looks. So now, more likely buyers below and sellers above, which is what we got as soon as we went below bar 7. We did trigger the low and short signal. However, we found buyers, and this is a buy signal here, right near this bull trend low. Also, it is a possible wedge bottom. So reasonable swing long here for a possible low of the day. Let me get rid of the previous day high now. And this the line. So reasonable swing long above the bar 8 high. However, the buy signal is not as strong. There is a tail on the top of the bar, which makes me think that only a minor reversal up is likely. The best that bulls will get is two legs up after this wedge bottom, but not a strong bull trend. Bar 9, strong entry bar for the bulls here. However, we are right near the 50% pullback of this bear leg. We went up, we went down, we are going up again. So there is more likely going to be confusion and sideways. Trading range is more likely than a strong bull trend here. So if you were long on the high of bar 8, you got a strong entry bar and you got almost 50 points here. The bulls will more likely scalp out of the longs here. If you get another strong follow through after bar 9, I will change my mind and I will look to buy higher. That would be an indication that the character of the market is changing. Instead of being sideways, it will turn into a strong bull trend. However, for now, a disappointing follow through is more likely, which we got on bar 10. Disappointing for the bulls, however, not a high probability short here. After two strong bull bars here and a tail on the bottom of the bar 10, there are more likely buyers below. Strong bear bar. However, we are testing the bar 8 high here. The bar 8 was a weak buy signal bar with a tail on the top of the bar, so more likely test of this high was likely, and we did get that here. So more likely buyers below. Disappointing follow through for the bears after this big bear breakout. We found buyers here. However, this is not a high probability buy setup. This is disappointing for the Bulls after bar 9 and disappointing for the Bears after bar 11 makes trading range more likely. So buyers below and sellers above. Buyers somewhere in this area, sellers somewhere up here above the swing high. We have another bear bar closing near its low. However, we have a bear breakout here. We got a bad follow through. We have another bear breakout bar here. What do you think is more likely? Bad follow through is more likely. Buyers below is more likely. Sellers will be somewhere up here. Bar 14, good bull bar closing near its high. A high low double bottom with bar 8 low and a high to buy setup with bar 12. However, since it is a possible trading range day, this is too big of a bar for me to buy. The EMA is flat and this bar is forcing me to buy high with a big risk for only a scalp buy, not a high probability buy yet. It is a reasonable swing long for a possible low of the day and a breakout above this high, breakout above the neckline of the double bottom and a possible measure move up. But trading range day and bad follow throughs are more likely than a strong bull trend. So I would wait. I would wait for a smaller bar, a bar which gives me less risk rather than buy high above bar 14. We went above bar 14 high, we found sellers. However, bear breakout bar here, bad follow through, bear breakout bar again, bad follow through. What do you think will happen after bar 15? Bad follow through is more likely. Bad follow through for the bears here, doji bar, bar 16, but not a great buy signal bar. We have a wedge bottom here. Bar 16 is another high low double bottom with bar 8. However, not a high probability buy signal. Best is to wait for a bull bar closing near its high to buy, which we got on bar 17. Reasonable to buy above this bar for a possible two leg up. We got two legs up after this wedge bottom. This is a reasonable place to go short below bar 20. Good sell signal, low to short at EMA. Reasonable to go short here for a possible breakout below bar 16 or a breakout below bar 8 and for and to and a possible measure move down. However, the sell signal didn't even trigger and we reverse back up. Usually when we have a wedge bottom here, we usually go to the top of this start of this wedge bear channel, which is bar 12 high, which we got there. We did get there. More likely the bulls will scalp out of the longs here, so more likely sellers somewhere in here. Bar 24. Now we have a wedge top, a double top with bar 12 high. EMA is flat, and we have a gap below the low of the bar and the EMA. Reasonable short here for at least a scalp. Bar 32. We fell for a scalp below bar 24. We have two consecutive bear bars here. However, look at the bars to the left. We are still in this tight trading range. There are more likely buyers below. Trading ranges will always look the most bearish somewhere near the bottom and will look the most bullish somewhere near the top. However, you should do the opposite of what it tells you to do. So there are more likely going to be buyers below. If you were a bear and you went short somewhere near this high, now is the time to scalp out of your shorts here. Wait for a strong bear breakout below bar 16 low or below the day low before going short. We got another three bear bars, but however we were yet to break out below, and now we have a buy signal on bar 34. Reasonable swing long, however higher probability is to wait for a second entry buy setup after this three strong bear bars. Second entry is more of a high probability, which we did get on bar 38. It is a bear bar, but it is a reasonable second entry buy in this trading range. Trading ranges will give you weak buy signals, but as long as it is a reasonable thing to do, you can take the trade for a possible scalp. So reasonable to buy above bar 38 high, double bottom with bar 16, double bottom with bar 38, 34, and a reasonable scalp from near the bottom of this trading range. This is the bottom of the trading range, so a buy zone here. So look to buy, and bar 38 is a buy signal. So I will look to buy above the high of that bar. We went above again, two strong bull bars here. The buyers can scalp out of the longs here. This is a zone where there will more likely be sellers. Unless we break out above this high, the buyers should only be looking to scalp. We went around that high. We have a small parabolic wedge top here, double top with bar 25 high. However, too many bull bars, so not high probability to go short below bar 48 low. Also looks like we have a doji here, we have a bull bar, we have a bear bar, we have a small bar. Too many small bars here near the high of this trading range. This is a sell zone. However, need a high probability sell setup. Bar 48 is not high probability yet. Bar 50 is that a reasonable buy signal here? We are right near the high of this trading range. I would wait for a strong bull breakout above this trading range high before I look to buy high. Right now, I'm only looking to sell. Bar 54, big bear bar. However, it's an outside down bar, and this tight trading range here lowers the probability. I am looking to go short, but I'm looking to sell on a smaller sell signal bar, a sell signal bar which is not outside down, because an outside down sell signal bar forces me to sell too low in a tight trading range. Bar 56, reasonable swing shot here. Bar 56 low. However, if you get a bad follow through, you you should look to scalp out of your longs. Reasonable to go short below bar 56 low with a stop at least above bar 51 high. We reversed back up, but we did not go above the bar 51 high. We are still in the side trading range. Looking at the follow through here, it is reasonable to exit your shots here. It is also reasonable to hold your shots with a stop above bar 51 high. We did not trigger that, and we reversed back down. Also, bar 62 is another reasonable place to go short. Only for a swing trade. The probabilities are never going to be high in this side trading range. That is forcing you to sell somewhere near the middle of this side trading range. The probability is never going to be high. If you want to take a trade in this side trading range, it is only for a swing and not for a scalp. Higher probabilities to wait for a bull breakout above this, a bear breakout below this, or a possible bear breakout below this overall trading range before looking to swing your shots. We still were stuck in this side trading range. This is dead money. Also, we were approaching somewhere near the end of the day. If you see, we were in a tight trading range for around about 20-25 bars here, and it was almost 250, 245. We were so close to the open of the day that I was expecting the market to continue staying in this tight trading range till day end, close somewhere near the day's open, and make a doji chart on the daily chart, a doji bar on the daily chart. So the best thing right now, the best thing to do in this tight trading range was to stay flat. The market was probably going to close somewhere near the open of the day. Best thing was to shut your laptop or maybe just not take a trade and wait for the day to end and take a trade tomorrow. Instead, we did breakout here. However, this is not a strong breakout. Does this look like a strong breakout to you? No, it did not. Also, it is a possible wedge bottom. A failed breakout below the trading range low. And a reasonable buy signal on bar 73. However, this was just too late. Had this bar happened a little before, I would have taken that buy signal for a scalp all the way to day's open. However, this was just too late. It was around 3:15. Not many bars left. Not much time left for the bar to give me a good trade here. And we just ended in this side trading range here. So quite a sideways day today. We had a lot of patterns. We had double bottoms, we had double tops. Also, if you see, this was a triangle with lower highs and higher lows. We had high twos and low twos. However, the day just went sideways. There was no major swings. We had good swings on the open. However, we just entered a tight trading range around the second half of the day after around 12 p.m. Why did this happen? A lot of people might be wondering why did this happen. So basically, about 80 to 85% of the volume in markets is usually controlled by computer algorithms. All this, all there are a lot of firms, okay, and all these firms have a collection of algorithms for different market conditions, for bull trend, for bear trend, for trading ranges, and they keep switching the algorithms. And once all these firms start trading with a similar algorithm, there's no one left to take the other side of the trade, and the market just gets into a limit order market here. And the same thing happens on the opposite side. Like once 100% of the firms, not even one firm is left to take the other side of the trade, and 100% of the firms start taking the limit order trades here, the market enters a breakout mode market. And then we have a breakout mode up, a breakout up or down. So quite a sideways day. Today we had a bull trap on open. We had a bear spike, a wedge bottom, and then we just went sideways for the rest of the day. Okay, so what do I expect for tomorrow? Tomorrow is the last day of the month, 30th of April, and the close of tomorrow will decide how the monthly bar looks like. We are so close to the high, the bulls would either want the market to close somewhere here or would want the market to close further up. So, more likely tomorrow, I expect the market to either go sideways or have another bull trend day. The daily chart, we have a bear doji here, a weak bear doji. There are more likely going to be buyers below this bar. So if tomorrow we open flat and if we break below the previous low, I expect buyers somewhere in here and the market to go sideways and close the bar as it like it looks today. If we open flat and if we reverse up, I expect sellers somewhere in this area. Only if we have a good gap up, a reasonable gap up above this trading range or at least above this previous day high, and if we have a strong bull trend on open, I will expect another strong bull trend day tomorrow, a strong bull trend day tomorrow here, and the monthly chart to me even more bullish than what it looks right now. So tomorrow, either a sideways day or a strong bull trend day. Very less likely we will have a strong bear trend day tomorrow. The bulls on the monthly chart would want the bar to close somewhere in here or further up rather than have a strong bear trend day tomorrow. Probability favors the bulls tomorrow. So that's it. For a good swing long tomorrow, we need a gap up. If we open flat, it is more likely going to be sideways. Thank you. Thanks everyone for watching. Best of luck for tomorrow.